Recording.
All right. Welcome, everybody, to the Wednesday, December 13th, 2023 Aladdin DAO Community Call.
Absolutely. And for everybody outside of Texas, welcome to the Wednesday, December 13th,
He just,
2023 Community Call.
When we get to talking about a boot, the various items on the community agenda.
We will be talking about various items on the community.
Yeah, whatever.
That's.
I can lob some grenades too, sir.
Oh, well, you know what? Bring it on.
Yeah.
That's how.
Yeah.
No, I mean, aren't you supposed to be the straight man in all this?
It winds up being that way more so than usual. Yeah.
The heel. What's the butt of the isn't that called the heel in the
well, the heel is the butt of the joke, but everyone's having their fun time taking pot shots. So
yeah, well, and you know what? It's something we can all enjoy, isn't it? So that's
I guess so. That's what I'm here for.
It's very inclusive.
All right. Well, on that note.
Boy, did not take long to get off track today.
Yeah, boy, I tell you what. But we got a lot to get through today, so we need to get hopping here.
I mean, we do. We've got some ill-defined. We're gonna do some meandering, as Charlene likes to say, some meandering through some of the implications of this latest governance vote, but also we've also got meat to talk about, so we should probably jump in.
That's right. Okay, and so I guess we'll start off with FX then. F of X.
Yeah, F of X, my friend. I agree. Let's start there. And so we had this big sort of a snapshot vote running on looking for the community's feedback. There's been all this discussion of we talking about launching the USD pegged stable with the F of X machinery, and we had a couple of different implementation options there about whether we were going to do a 3-asset and lump everything in together with FETH, or if we were going to do a 2-asset approach where we would have sort of different pairs of USD pegged like zero beta assets and their associated X, and it was a pretty clear vote result.
Yes. Yeah, so that's what we're doing then. The community has spoken in all the various ways that you can vote and speak.
Yeah, and it's interesting. I mean, a lot of it, I think, obviously it was like overwhelmingly vote for 2-asset. My impression of that, and take this for what it's worth, which is not much, is that the community is kind of like. I don't think that the community hates the 3-asset approach so much as just like everybody is kind of wants to be aligned on whatever that we're going to go forward with, and that in the end this seemed like the like somewhat better choice or the slightly better choice, and there wasn't any weighted voting or anything else. So speaking as somebody who advocated for 3-asset, I am not really disappointed that we ended up with 2. It's also a fairly early indicative vote. As we are going to, well, actually, maybe we can talk a little bit about it now. The team has been it was pretty clear which way this was going for a while, and actually for a couple of weeks, the team has kind of been working pretty crazy in the background, trying to work through the implications of how we would deploy this 2-asset approach in the most kind of flexible way. When we were talking about it all together in the community, a lot of it was we were talking about the sort of the naive approach, which is just roll out as many F of X pairs as you have LSDs, and then you end up with that many F tokens and that many X tokens, and do we want to do that, or do we want to kind of lump them together? I think that in terms of the final design, exactly how we're going to employ those 2-asset pools is still under discussion. We're working on it on the team on like the smartest way to roll this stuff out. And also looking back, we're trying to take as much as we can from the discussions in the community and the concerns that people raised about 2-asset. And one of the big concerns about the 2-asset approach is just the question of how many tokens can be in the reserve. So it's like, does each LSD have to have its own FUSD? How can we how can we how can we simplify the narrative a little bit? And so, well, nothing, that we are still working through those implications, but we do have a few ideas we'd like to share with the community, with you guys on this call, just to get a little bit of, just to get a sense of whether you all see any stumbling blocks or anything that you guys want to sort of chip in at this point in time. Part of the process of building in the open, right? Mm-hmm. And one of the things that I really wanted to bring up, this idea that we've been kind of tossing around, is for these zero beta stables, one thing that we could do to simplify the overall narrative of the protocol would be to have each zero beta, each F token in the zero beta pairs, right? So zero beta means USD pegged. So basically, every USD pegged token that you would mint against a given reserve, we're talking about potentially making those illiquid and only able to be in the rebalance pool. And then essentially those rebalance pool deposits are the USD pegged tokens, but they aren't like a multiplicity of tokens in the wild. And then on top of that, what we would do potentially, again, none of this is confirmed, and I want to hear your feedback for sure, is allow people to withdraw from those rebalance pools as a single asset that would be FUSD. And then that FUSD that has been withdrawn and that asset is liquid, that could have contributions from multiple different of those F token rebalance pools. But in the end, the only liquid token in the wild is FUSD, right? And so rather than having this huge, now that none of that addresses the X token question. Those are still, we're still thinking about those, but it's quite likely that those will still have to be sort of different tokens with each LST. But the idea here, so and Cyril's asking a question, FUSD. So basically, I'm not talking about FETH at all. I'm just talking about how would we implement FUSD, because we're creating this a whole bunch of different ways to create a USD pegged stablecoin, right? You can I'm assuming that we're going to have multiple different LSD reserves, and each one of those reserves will have its F token, and each one of those F tokens will be the same. They'll be pegged to the dollar, right? And so rather than having a whole bunch of different tokens that are all essentially the same thing, we call them all FUSD, but we don't allow them to be anywhere except for in the rebalance pool associated with that reserve until they are withdrawn and liquid. And of course, withdrawing those tokens in a liquid way, at least in the beginning, is probably not going to, until there's utility for those tokens, for the liquid USDs out in the wild, probably not a lot of people are going to withdraw them, but that's fine, right? To roll out this 2-asset pool, the primary goal, I think, is to have these basically these different farming options, because the farming options open up a ton of the functionality of F of X, and I think most importantly, they open up the ability for DAOs and protocols to come and basically bribe for or just vote for gauge emissions to their reserve pool. So that creates that FXN world situation that we've all seen how the flywheel works for, right? And giving the different protocols, the different DAOs, the ability to increase the yield in their own rebalance pool lets them fight for that liquidity and pull as much liquidity as they want into their reserve and their rebalance pool. And that builds that big liquidity depth in those rebalance pools that we can then draw on to create this external liquid token. Does any of that make sense?
No, that was a pretty good description.
So, now, as I said, all the caveats apply. We're thinking through the implications of this and trying to kind of get out in front of it, but would love everybody's sort of thoughts and feedback on that, whether that makes sense to you. Now, obviously, for the FUSD token, we need to be able to do at the protocol level, we need to be able to do some sort of risk management, right? And so that would involve things like debt limits, and so the way that might work would be, excuse me, the way that might work would be, you can mint as much of the F token into the rebalance pool as you want, right? Subject to the limits of how much of the X token is available, right? Because those two, they play off each other, they support each other. So there's no limit on how big an individual reserve can grow, but we may put a limit on how much of that reserve can contribute to the liquid FUSD supply in the wild, right? So rather than thinking of it as a debt limit, it might be like a liquidity limit or a withdrawal limit. Again, you can always withdraw assets from rebalance pools back to the underlying reserve, right? You put your staked ETH in, and you're farming reserve. You can always get your assets out by redeeming back to the staked ETH and going. But in order to get your USD pegged asset out as a USD pegged asset, still you would be subject to that. Like everybody would be subject to that withdrawal limit, and then in that way, the protocol could control essentially the amount of each of those F tokens that contribute to the total liquid supply of USD. And when all of the different, like when we call all of those different USD pegged tokens the same thing, I think it makes sense to use a word like FX USD, because remember that FETH is like fractional ETH. So FUSD to me, like, it's not fractional USD, it's just USD. We want to have USD in the ticker name to make it clear that it's a stable coin. So maybe FX USD is a good compromise. But again, definitely interested in people's opinions there too.
Yeah, and we're thinking about it, and obviously, it's trying to optimize for all sorts of situations here. So
oh, crypto.
Is it okay if I chime in?
Yeah, please. Yeah. I was just going to say, anybody from the community want a minute on the to give
sure.
feedback?
I think that's a very elegant solution. I think it covers all of the bases, right? I mean, you have one asset, two asset model, but you have like one main USD pair, right? So you're not worried about all these different F tokens. So I think that's really positive. It also makes it easier for the protocols to understand when it comes to their bribing the rebalance pool. So it even though it's not really apparent to everybody on the front end, there's individual rebalance pools for all of the staked derivatives. So that's good. The only thing that I didn't understand, maybe you can clarify a little bit, Kruger, is you said there was like a limit to how much could be withdrawn from the, we'll call it FX USD side. Does that mean that there's like a certain loan to value that is always changing when, like, let's say I put in, $1,000 worth of staked ETH, are there times when I can take out a certain amount, or like 50%, 60%, or is it just variable, or how does that, I didn't understand that part.
Okay, yeah, fair enough. I'll go back to what I was thinking there and try to clean it up. So the thing that the protocol wants to control is the backing of the liquid USD token in the wild, right? So if you think about the liquid USD token in the wild is backed by individual F tokens that are not deposited in the rebalance pool. Okay, right. So essentially, you bring your staked ETH to the protocol, and you're going to see a list of let's say you bring ETH to the protocol, and you see a list of all these different LSDs and their associated rebalance pool yields, right? So so one thing that you can do is deposit directly into that rebalance pool and start earning right away. Any rebalance pool, assuming that there's enough X token that you're not like, as long as the F minting isn't disabled because that particular FX, like that particular pool is like really out of whack in terms of the collateral ratio, you deposit that into any pool and you start earning that yield, and as soon as you're in that pool, you're in FUSD, in that you are in that dollar pegged, like you're pegged to $1, right?
Right.
At any time, you can redeem for staked ETH again and get it. There's never a limit on that. There's never and there's never a time when you can't get whatever your like whatever the dollar value of your deposit is, that's been pegged at $1, you can always get that amount of the reserve back out again, just like with the regular FX pair. The thing that we need to limit is how much of that F token that's farming, how much of that can be withdrawn from the rebalance pool as a stable coin, right? And the reason we need to limit that is because we want to make sure that FUSD is not backed entirely by a single LSD derivative, right? If you imagine there were no limits at all on it, and anybody could take that at any point, then the composition of tokens backing FUSD would be completely variable. It could change. Like FUSD could be completely backed by a really strong LSD, or maybe we onboard a whole bunch of different tokens. Like imagine these. We haven't talked about the farming pairs, right? For like CVX. Mm-hmm. If that's going to be USD pegged, we could call those FCVX tokens. We could call them FUSD as well. But then, do you allow that FUSD to be withdrawn? And then how much of your stablecoin should be backed by a DeFi token, like a farming token?
Yeah,
Probably
no, I agree with that.
Right?
Not good idea. Yeah, agreed.
Yeah, so probably certain assets shouldn't be allowed to back FUSD at all. But among the assets that are allowed to back FUSD, you want to control the mixture of them a little bit, right?
So how will that look like from a graph, from like a GUI's perspective? Is it always a set limit, or is it variable? Every time you go to the protocol, there's a variable amount of FUSD that you can take out.
It would be variable depending on what the backing of FUSD is right now. So for example, if you imagined that that one person pulls out 100 FUSD from the staked ETH reserve, and one person pulls out 100 FUSD from the SFRAX ETH reserve, those tokens are backing FUSD. So those would be, there would be a limit when you hold FUSD, you can only redeem it into tokens that are backing it, right?
And that makes total sense now that you say it. Yeah, that makes sense. So there'd be some kind of number that we would see. Okay, like you could take out X number of FUSD at any given time. There would be a number that you could see to know how much you could redeem.
Yeah, exactly. And what it would be, so if you want to pull the FUSD out, there might be like if you put $10,000 worth into the rebalance pool, and that token was already, like FUSD was already overly backed by that particular reserve. Again, it's all depending on the limits that we set. So we can set high limits for tokens with really good liquidity and really good pegs, and we can set lower limits for tokens that maybe have questions about whatever. Like we that's the risk management side of things, right? Right. And we have not got to the point of like defining exactly how we're going to do that, but we know we need to be able to. So maybe you deposit into a reserve, maybe you deposit into a relatively risky staked ETH reserve in order to get whatever you're depositing in a relatively risky staked ETH reserve because you want more yield, but then you change your mind, you say you want to get that out as a stable. If a lot of people have already withdrawn that as a stable, you might be limited, right?
Right.
Now, in that case, you could redeem your staked ETH from the reserve and swap it to a different reserve ETH and pull out an FUSD through that, right? It would just be we would control the tokens that directly back FUSD. We would have to have some way to set limits for those.
That makes sense.
And then
that makes sense.
On the redeeming side, going from FUSD back, you would have if you wanted to redeem, you would the options for redeeming your FUSD would just basically be you'd see them as list. And maybe there's no SFRAX ETH left in the FUSD backing. If you hold FUSD, you couldn't redeem to SFRAX ETH if there isn't any in the backing. Right. So then what do you do? You redeem to whatever is available in the backing at that time. Now, again, chances are for most people it's never going to be an issue because hopefully the reserves are big enough that and as I said, I don't actually imagine that a ton of people are going to be pulling FUSD out of those rebalance pools because I don't really see why you would do that, right? You can earn big yields. You earn big yields in the rebalance pool, right?
I agree. That makes sense.
Yeah. Yeah.
Yeah.
Pull it out as
Okay,
a liquid
yeah,
token,
yeah.
which is nice, but doesn't earn
It's
you
just
any
something we
yield.
need to understand if we're going to be explaining it to people. Like we need to understand how that system works and,
Absolutely.
why people, are limited on how much they can take out. And it has to do with the backing, obviously. And that makes a lot of sense. So that makes sense.
And it's the hope is that a lot of this stuff just disappears as a detail, right? Like if we set the limits, like depending on where we set the limits, if we expect the majority of the volume is coming in through staked ETH, for example, and we set a really high limit for how much of the fixed staked ETH is backing FUSD, then nobody's going to notice. It'll just be
Right.
It'll just be easy, right? The only place where you might start, like where people might notice it, is if they're minting a token based on an LSD that has a lower limit.
Right.
And also other people who minted that same token are also trying to withdraw it as FUSD. So in the beginning, when there's no real need when there's no purpose to withdrawing FUSD in the beginning, like there's no utility, there's no yield, chances are
it's going to stay in the rebalance pool, which is better for the protocol. Yeah.
Well, it's better for the protocol. It's better for the depositor. It's kind of like the default. It's kind of like the thing that you're generally there to do, right? And then being able to pull it out as a liquid thing will become a much bigger deal once there's more utility for FUSD, which we are working on in parallel, of course.
Right. No, I think it makes a lot of sense. Like I said, everything you've said so far, as far as using everything consolidated into like one FXUSD pair or FXUSD asset.
Yes.
And still in the background, you have these individual rebalance pools that people don't necessarily see. You don't have all these F tokens floating around. That makes a lot of sense. And it makes sense from the protocol's perspective too, because then they can bribe and know what they're bribing for. We probably have to have like some kind of, graphic interface so that they can see what each rebalance pool is doing or whatever.
Yeah, absolutely. And that'll be you're dead on there. And so basically part of the what we're thinking about in this design is we want to make sure that there is a maximum incentive for protocols to bribe token yields to their rebalance pools.
Yeah.
Right.
The bribing piece is a big part of it.
It is. And also the more of that token is in the rebalance pool, like we haven't really talked about other ways to set that USD limit, because potentially the deeper the rebalance pool, like the deeper the total liquidity of that FX pair, the safer it is as a FUSD back, right? Like you eliminate any risk from low liquidity on the FX pair side, and then you're only taking risk of the actual issues with the actual asset itself. So maybe we would with a low liquidity FNX pair, maybe we would not want that at all backing FUSD, but maybe once you reach some liquidity, then some of that can back FUSD, and that's all positive. Like that's all really good stuff for an LSD asset, right? Like it's utility for that asset. And so that brings another big incentive for protocols to bribe emissions into their respective rebalance pools. Okay.
Yeah, totally agree. Perfect.
Okay, so do you have any does that work? That makes sense for you, CryptoVestor? Because there's a couple of questions in the chat I want to get to, but I don't want to make sure that we've wrapped everything up here. If that's all clear.
No, that makes total sense. Yeah, thank you for answering the question, and I definitely understand it a little bit better.
Yeah, and remember, again, we're just talking about this. This is not implemented. It's not done. It's not a done deal at all. But I really wanted to bring these ideas to the community to test them on you guys, and to see how you if you like it, if you don't, that kind of stuff. So just ask all the questions are what we're here for. So ask them and let's dig in more. Okay, Siendo has said confused on the rebalance pool. If I deposit 5 ETH, do I still have ETH or do I have 0 beta exposure? Paul says you don't have ETH exposure. So for the design we're talking about, Siendo, the idea is that so first of all, every rebalance pool has the stable token. If you think about FETH, you deposit FETH into the rebalance pool for the FETH and XETH pair, because that FETH is you deposit that FETH there to earn that yield, and then if that pair becomes under collateralized or low collateral, some of that FETH is redeemed into the staked ETH from the reserve. So every rebalance pool is filled with the stable version of that token, whether that's beta 0.1 for FETH or what we're talking about here, beta 0, these USD pegged. So whenever you're in a rebalance pool, you are USD pegged, and that is from the perspective of the token that you're holding and its value. You have FX USD in a rebalance pool, right? So what we're talking about is if you ever want to take that FX USD out of the rebalance pool and use it like completely somewhere outside of the protocol, or have it in your wallet but not have it in the rebalance pool earning yield, in that case, you would need to withdraw from the rebalance pool as FX USD, and that action of taking a collateral out of the rebalance pool and moving it into the FX USD that's out in the wild, that's the thing that we're talking about the limits for. But, we're going to do our best to structure this in a way where a lot of those implementations are kind of hidden from the user, like they're not important. So, we're talking about this idea of saying like, okay, you can mint, if we call assets in every rebalance pool FX USD, then it kind of makes it clear to people that, yeah, they're holding this USD pegged coin, but it's in the rebalance pool, or whatever rebalance pool they have it in, right? Maybe they've got it maybe right now it's in the staked ETH rebalance pool. Maybe they want to move it to the SFRAX ETH rebalance pool for a higher yield. And even though behind the scenes, those are different tokens, right? Like there's the F token from the staked ETH pair, and there's the F token from the SFRAX ETH pair. Behind the scenes, those are completely different. But on the interface, we can make it look like you've just got this FX USD token. You can choose to have it in whichever rebalance pool you want to farm yield in, and then if you choose to take it out of every rebalance pool and have it liquid in your wallet, or maybe in the future at some other utility, some other protocol, that act of moving whatever token from rebalance pools out into the wild, that's the one that we have these limits on. But again, if we set the limits properly, even that people shouldn't really notice, because the idea is it should be pretty straightforward, and it should kind of all look like the same thing. So for easy mode, I can just deposit in the rebalance pool and it's 0 beta, and I can still get yield from the rebalance pool. Yes, absolutely. That is the idea. You take your staked ETH, you use it to mint FX USD. So your staked ETH suddenly becomes beta 0 fixed pegged USD. Basically, you sold it into this USD pegged. Now you get yield from the rebalance pool. The yield is from two things. Remember, the magic of the rebalance pool is that it takes the yield from the underlying reserve. So for staked ETH, it takes the yield from the staked ETH, and it sends half of that yield to the rebalance pool. That's why right now the FETH rebalance pool is earning staked ETH directly. And if you deposit in the FETH rebalance pool, you're earning staked ETH from the reserve, and that's going to be true for all of the LSD assets, right? Every reserve asset, all the reserve assets we're talking about are yield bearing reserves, and so we take the real yield from those reserve assets, and half of it goes straight into the rebalance pool associated with that reserve, and then in addition to that, there's this cage emissions thing where protocols can come and juice the yields in their pool by directing FXN emissions there. So the rebalance pool, even with 0 gauge emissions, still earns half of the native yield of the reserve. And that's, we've talked about this internally a little bit, but like to me, that's a huge part of the narrative of FFX. Huge part. It is real yield reserves for a stable coin. Right? It's you mint this stable coin and you get the real reserve, the real yield from the reserve used to mint it. Similar to Prisma, where LSD can bribe their individual pools. Yes, and that's the way. I mean, frankly, it's the way Curveworks is the way a lot of things work. But the sort of the magic is like you give protocols a way to use your token emissions to increase their liquidity on your protocol. Okay, how am I doing, K-Mets? You still
Man,
awake?
I'm just letting you cook, man. This is fabulous. Yeah, you're doing a great job. All right.
Well, my mouth is dry, so I feel like I've been talking too much.
No, you're doing great. Last question. The backing of FXUSD is always 1-to-1 to the deposited ETH, so never a restriction of pulling out your LSD.
So the backing of FXUSD is 1-to-1 to the deposited ETH. Yes. However, keep in mind that the value of your FXUSD is pegged to $1. So you won't get necessarily the same like number of LSD tokens out when you withdraw, right? That's how the F of X mechanism works. You get pegged to $1, and so the if the price, so if you mint we'll call it FXUSD with ETH, you put in $100 worth of ETH, you get 100 FXUSD. If the price of ETH goes to $200 and you want to redeem, you get $100 worth of ETH. And so that'll be less than the ETH that you put in, but it'll be the same USD value of what you put in. And then CryptoVestor, the other half of Yield, that is protocol revenue. And that's where being a VEFXN holder is lucrative.
I think that question, if that can be redeemed 1-to-1 to ETH, right? I think there is something we should highlight here, right? Because the way how FUSD works, right? So people mint FUSD with STETH, right? May have to redeem with FrexETH, right?
Yeah.
Right. So we should explain
right.
that.
Let me clarify that. So this is where when we use the same name to describe it, we call it all FXUSD. There are some little points, like as Charlene points out, there are some little points of confusion. So for example, if your token is in the rebalance pool, that's kind of the situation I was talking about, is if you're in the rebalance pool, you can always redeem back to the reserve associated with the rebalance pool, right? So if you take your staked ETH and you mint directly into the rebalance pool, behind the scenes, we all know, us people behind the curtains, all of us here on this call, we all know that behind the scenes, that is an F token that is associated with an X token just from that staked ETH reserve. But if it's called FXUSD because it's all, it's pegged to $1, the same as that, it might be a little confusing. If you're in a rebalance pool, you can always redeem to the reserve asset of that rebalance pool. But as soon as you go away from the rebalance pool and you go out into the liquid world, right? Now you are, this is the quote unquote the real FXUSD, and it's backed by whichever tokens have been used. Like, it's backed by the tokens that were used to create the liquid FXUSD. Okay, so if you use your staked ETH to mint FXUSD into the rebalance pool, then you take it out into the world, there's a chance when you have FXUSD out liquid, there's a chance that when you come back, you can't go back into staked ETH, right? Because if somebody else has redeemed their FXUSD for the staked ETH in the FXUSD backing, then you might have to go out through one of the other LSDs, right? That's kind of that's one of those details that's important in some situations, and it's tough to understand when we call all of the zero beta tokens the same name, right? So maybe a weakness to calling all the zero beta tokens the same name, but that's an important detail. So in the rebalance pool, you can always go back to the associated reserve. Once you've withdrawn out into the liquid FXUSD, you have to go out through whichever tokens are backing that liquid FXUSD. Would there be a way to stake FXUSD to a specific rebalance pool again after going liquid? But yes, subject to that token backing FXUSD. So if the liquid FXUSD is backed by half staked ETH and half sFrax ETH, you could easily go from FXUSD to either of those rebalance pools, right? And essentially what you're doing is you're redeeming FXUSD for the FXUSD type that is in the rebalance pool and then depositing that in the rebalance pool. But just like the situation I just described, if you have FXUSD and you want to go into a rebalance pool, there has to be like that. You have to have some of that F token backing the FXUSD in order to enter that associated rebalance pool, right?
I think once we kind of like put together a Twitter thread and have some graphics, that might be kind of helpful for everybody to kind of understand. So there's, like we said, we're still early on. We're still thinking it through. So, but these are all really great questions.
Yeah, and you know what? It's good. It's good to think about, like there are implications to everything, right? And it's good to really think through what the simplifying the user interface and calling everything FXETH that's zero beta. I tend to think that is still the smart move, but it does create little confusions that we need to make really clear. Like, for example, once you've become liquid, once your FXUSD is liquid out in the world, your options for going back into a rebalance pool or back into a reserve asset are a little different, right? Your FXUSD that's in the staked ETH rebalance pool, for example, you can't change the type of reserve that is. Like in the staked ETH rebalance pool, you have the zero beta staked ETH. You can't redeem that for zero beta sFrax, right? So, but when it's the same token name and it looks like just, different pools, it becomes a little bit complicated. So I think we can get around most of that complexity just by good UI design. And obviously people will see the options they have on the UI, right? When you're in the rebalance, like say if you've deposited in the staked ETH rebalance pool and you have US dollar pegged deposit in the staked ETH rebalance pool, you will have the option on the UI to redeem to staked ETH and maybe to withdraw to FXUSD, assuming that we aren't at the limit for staked ETH withdrawals, which again, I expect the limit for staked ETH withdrawals will be very, very high because, we chose staked ETH to back FETH because it has really, really deep liquidity. And, we probably would have either no limit or a very high limit for FUSD, FXUSD backing on the staked ETH side.
That's why we set this bet limit thing, right? For each collateral can be minted into FUSD. Right?
Yeah,
it's just you can use STEs to mint 100 million FUSD, but you can use, Frax ETH to mint like 50 million FUSD, right?
Yeah.
That's how it works.
Yeah, exactly. We set those limits, and that makes sure that the FUSD that's in the wild, because we know behind the scenes, FUSD in the wild is actually different than deposits in a rebalance pool, and that deposits in one rebalance pool are different than deposits in another. Those are all different things. But exposing 100% of that, like with all of those tokens liquid, would just be a complete mess. I think just confusing and huge liquidity fragmentation. So we want to make it so that protocols have a good incentive to bribe for depth in their liquidity pool, and we don't want the FUSD backing to take away from that. So yeah, it's we have to get the details right to make sure that, because people might be confused when they see that they only have certain options. Like when you're in a certain rebalance pool, you can only redeem to the reserve associated with that rebalance pool, or possibly to FXUSD if you're under the debt limit. But that making those clear on the interface, I think will be good. Let's see here. Jumping in, looking in the chat, Cyril says, would there be a way to stake FXUSD? Oh, no, sorry, we talked about that already. CryptoVestor, can all the X tokens be consolidated? This is something that we are still talking about, but it is a lot more, it's non-trivial. Problem, so if you think about FUSD backed by all these different LSDs, it's like an ETF, right? It's like a basket of exposure to these different USD pegged F derivatives. On the X side, each of the X tokens associated with those individual reserve pools is going to have different leverage, different NAV, right? Like they're all going to diverge. And so if we tried to make like a basket where there was only one X token and you get exposure to all of them, it would be really easy because those X tokens all they're all liquid under the covers. People could, even if the user interface required people to buy this ETF, people could always deposit into those X tokens directly, and there would be ways for them to kind of like play games with like the leverage. Like you could deposit to an underlying X token that has the highest leverage, and then you'd have better leverage than the ETF would, kind of thing, right? But the idea that having a whole bunch of different X tokens is not optimal is something that we agree with. It's just not clear yet whether there's a solution.
Yeah, there's lots of stuff still up in the air to be designed. So we'll certainly keep you guys informed and obviously want your input too, because
for sure.
Really smart community.
Yeah, ideas or things like that. I mean, we're trying to think through the implications. We've been tossing around the idea of an XETH ETF, like a single XETH ETF forever. Like we've been talking about it behind the scenes for a long time. It was one of the first ideas brought up to when we started talking about this. Actually, in the early days of talking about 2 asset versus 3 asset, the big weakness of 2 asset is you get the multiple X tokens. And the multiple X tokens that are all based on ETH, but they're all different leverage, different NAV at any given time. So like that ETF idea has been floating around for a long time, but it's not clear that we could do that in a way that wouldn't kind of screw over the people who held the ETF with the people who just like jump on Etherscan or like with the more sophisticated crowd, right?
Yeah. Okay. Well,
I was talking about Zaps. Get out of rebalance pool to FXUSD by redeeming swap-in. Yes, absolutely. There's lots of zapping options. And again, we would want to be careful because obviously there'd be because of all that volume, there would be minting and redeeming fees. There would be potentially slippage because if you have to swap between different reserve collaterals, that swap would happen outside of FFX, and so there would be slippage potential there. MEV issues there, absolutely.
So just a point of note. We're 50 minutes into the call and still on agenda item 1.
So what are you saying, K-Meds? What do you say?
I'm just saying that like this is going to be a long conversation, and there's a lot to digest and go through. So
between the lines, I'm getting a Kruger. It is time for you to shut up. Vibe. So kind of rude, but. All right,
I felt I did it as politely as possible, sir.
Monster.
Oh, Merry Christmas, everybody.
And a happy damn New Year.
So, as you can see, FUSD, we've done a lot of thought on it, and there's going to be a lot more thinking to do still. So, we obviously want everybody's input and want to get thoughts and input as it comes up. And so because everybody, we got a lot of smart people on this call, and so we've got a lot to digest. So let's go on to agenda item number 2 here. We have finally got the audit results for our rebalance pools, which will basically allow for VEFXN boost on the rebalance pools. So,
and the gauge emissions and everything. Yes.
Yeah, exactly. So this leads us to a very exciting opportunity where we are going to launch rebalance pools A and B. So A is the one you're kind of familiar with now. Rebalance pool B is the one we've kind of been talking a little bit about it every now and again. It's basically the one that will allow you to deposit FETH into it, and when the protocol reaches stability mode, it mints directly into XETH. So that's going to be able to be launched here tomorrow, actually.
Yeah, and so there's a huge implication here, which is that those rebalance pools need migration. That we can't upgrade the existing rebalance pools. So the all of those changes that are baked in, people have to actually migrate to the new ones. We are deprecating the old ones. The new ones are going to receive the yield, and people have to migrate. So we're going to do a big event. We've talked about it, right?
Yes.
For a 4-week period, starting when we deploy these pools, which I believe is on the docket for tomorrow. Folks are going to be able to earn their usual yields in the new rebalance pools, plus earning, you guessed it, points, because everybody loves points.
No one has an opinion on this.
No one has an opinion on points. Yeah, totally uncontroversial points. These points, is a 4-week-long period. Folks are earning their points based on. Well, we'll get the details to you tomorrow. But you're earning points while you're farming in that new rebalance pool, and so you got to get into that rebalance pool as soon as it's deployed, and earn as much as you can over the next 4 weeks, and you will earn a retroactive reward of FXN. We are taking 2,000 FXN and dividing them up between all of the points earners proportionally over that 4-week period. So that's a little bit of a excitement for Christmas, and a little bit of an extra incentive to move your assets over to the new pool. Do you see what I did there?
You're very clever, sir. Very
Thanks.
clever. So that'll kick off tomorrow, and we'll put out a notice and everything. So everybody get
keep an eye out for that.
Ready. That's right.
Get your FETH ready. Jump over into the new rebalance pool. Start earning. Continue earning. If you're already in the rebalance pool, you're going to continue earning the yields from the reserve, and you're also going to earn those bonus points for a later airdrop. Very cool.
Yep. All right. And then our last thing for F of X today is we're going to have a Twitter space tomorrow with TimeSwap.
Woo!
And, yeah, pretty cool. Talking about sort of like advantages of no liquidation leverage that you can utilize with XETH and with TimeSwap. So
yeah, super cool. First lend and borrow utility for F of X tokens. So that's huge. And we're going to do some coordinated marketing and some education. So come on out to that and wear your best F of X clothing and your best F of X swag. And on that note. Right?
Yes.
Right?
What about yes.
Meta, you wanna?
Oh no? Yeah, Meta, your giveaway, sir. Your giveaway.
On that note, we want to hear Meta CVX is going to speak. He's going to speak and be recorded in this community call, and it's not even after the end of the community call. He might be asleep actually right now. K-Mets.
I don't know. We'll see if we can coax him
Meta,
out.
are you around, dude? Are you ready to talk about what you've got cooking for tomorrow?
He's shy now. It's like Groundhog Day. He's seen his shadow. He's
Oh my
All right.
God.
Well, we've got a
I
giveaway. A team's got a giveaway. And so I think it'll be posted here either today or tomorrow, and so you can enter into the contest. But pretty cool. I think Meta posted it earlier in the.
Oh no, he's here. He's here. He's in the chat. I think he's gonna come on.
Hey, what's up?
There
you go.
Welcome.
More or less, okay.
Yeah, please tell us.
Finish.
Tell us what's
Finish.
up.
Finish.
Tell us what's up.
Good.
So, okay, Meta, the giveaway. Can you talk a little bit about the giveaway?
Repeat.
Yeah.
What? Tell us about the giveaway for tomorrow.
How about we get
tomorrow.
Professor to translate for Meta?
Tomorrow giveaway. 15 euros, okay?
And what are
Gotcha.
you giving away?
Eh?
What are we giving? It's a diary, you said? A calendar?
I don't understand.
That's okay. I read you loud and clear. We've got the diary and the mugs. So
Yeah, actually, what Meta, just please speak. Go ahead and speak Spanish.
yeah.
Oh no. I understand reading. I understand the time. Speaking, no.
Okay.
Okay, go ahead and say it in Spanish. Dígalo en español y yo lo puedo traducir.
Ah, vale, perfecto. ¿Qué me dijo, Cristo?
¿Qué es lo que están regalando?
Ah, 2 diarios, ¿vale? 2 diarios, uno de
Two diaries.
2 diarios, uno de Subex y otro de Aladdin.
One for Aladdin and one for ¿cuál era el otro?
El otro de Aladdin, el diario de Aladino. De Ali.
Okay. An Aladdin diary.
Y dos tazas tamaño grande.
Okay, two large mugs.
Son 2 packs y 2 ganadores, ¿vale?
Okay. So yeah, 2 mugs and a diary for Aladdin, and I think there was another diary, but I'm not sure which type of diary it was.
Amazing. And so,
CVX FXN, yeah.
so then what? How do we enter? What are the details?
¿Cuál es el proceso para recibir eso? ¿Hay un proceso?
Tienen que retuitear, ¿vale? Retuitear y seguir.
You have to retweet and follow.
Seguir las cuentas de Aladino y de Latín, ¿vale? La cuenta de Twitter.
Okay. Retweeting and following Aladdin.
All right,
is what he said.
All right.
So someone will probably be selected for those things, for the 2 mugs and for the diary, the Aladdin diary. If you retweet and follow the Aladdin Twitter.
Amazing. And then the last thing is, what's the deadline?
Cristóbal, ¿me escucha?
Sí. ¿Cuál es la fecha para la última fecha para poder recibir esto?
Vale, sería una semana, ¿vale? Sería el siguiente jueves a las 5 horas.
Okay, next Thursday at I think 5 p.m. you said. So 1 week is what you have.
Is it tomorrow? I thought it was.
No es mañana. O tienen hasta una semana para hacer eso.
Empieza mañana y hay una semana, ¿vale?
Okay, so it starts tomorrow, but it ends in a week.
Ah, okay. All right. And the time zone for that is UTC?
¿Y cuál es la zona del tiempo? O sea, ¿es UTC o es?
UTC.
Okay, so
right.
5 p.m. Thursday UTC.
All right.
Okay. Otra cosa, Cristo Vector. Dile que en los próximos sorteos se realizarán mediante Llamamarque, ¿vale?
¿Cuándo?
Los próximos sorteos
Ajá.
no serán mediante mi proveedor, digamos, sino mediante Llamamarque, ¿ok?
Okay, so it's going to be, it's going to come out of the Llama Market. So it won't be coming out directly from him. It'll be coming from the Llama Market.
Ah,
Okay.
all right.
Something to keep in mind.
Yeah, maybe have privacy implications for folks. You can kind of
Exactly.
it chooses. You can kind of it's who you're dealing with for like addresses for deliveries and stuff. So that's actually very good information.
Hey guys, we're just practicing for our Spanish spaces. It's going to happen.
Good.
I'm ready.
Absolutely, it should.
Absolutely, 100%.
Yeah, Kimmets and I speak English and bad English, and so we could do a space in either of those languages.
We specialize in bad English.
Well, yeah, obviously that's the native tongue, but you know, I can speak high English as well.
High English.
Yeah,
I want
That's
to hear
where you
your
spell
French.
color with a U.
Zero. Je suis désolé, je ne parle pas français.
Oh my word.
Yeah, so I'm sure we'll do a Spanish Spaces at some point in the next year.
Cool.
Yeah,
Definitely.
I mean, hopefully it's sooner than that. But yeah, that's amazing. Thank you, CryptoVestor. Thank you, MetaCVX.
Yep.
That
Yeah,
was
man.
one of the most unique things that we've had happen in our community call in a while. Love it.
Absolutely. Thank you.
Okay.
Cool. So we've got a couple of things, but they're mostly details. Let's just zip through them because we are over time, and I see a lot of people are running out of time for their own schedules, which we have once again not respected.
I know. Okay, so Clever's all good. Harvest Round 59 is in.
Awesome.
Today, actually, for Concentrator, I'll be on Reserved Community Call. And so here's the link to that. It'll be in their Discord. So that's it. Noon Eastern, which is
2 hours.
6 p.m. UTC. Yeah. So there you go.
2 hours from now.
An hour from now, almost. Oh, no, you're right. Yeah, 2 hours.
It's 2 hours. 2 hours from now.
And then Aladdin, the ALD tokenomics revision snapshot ends tomorrow. So that's to cap it at 150 million. So
yeah, and so far the 4 votes have a slight edge of 14 million to 0.
Surprising no one. Surprising
no one. Let's but you never know, folks. You never know. It could be a nail biter at the finish. Yep. So if you have not voted, please do vote on the no-brainer Aladdin tokenomics upgrade proposal. And for everybody who's got a few extra minutes, we have a blast from the past here at the end of this call. Charlene has offered to make a market update. Last week we were in a bull market. And this week, this week it's we're totally not. Dead. It is once again bear. So we're bringing Charlene back in with her magic to she's going to perform a ritual called the Charlene Market Update, and that calls forth the bull market.
So are you saying I'm a leading indicator or reverse indicator?
I'm saying you're the cause of the bull market.
That's leading, yeah.
So very leading.
All right. So let's say goodbye to our friend Craig for the last market update for 2023.
Adios, Craigo.
I'll stop Craig now.
I never liked that guy.
Adios. See, there's my Spanish.
Pretty good.
All right. So let's start from what happened to the market last week. So US dollar, US Treasury bond yields across the term structures and the US equities all went up last week. So whenever correlations break, there must be something going on, unusual going on. So let's dig into what happened, in particular last Thursday and Friday. So Powell indicated that Fed was not in position or rush to lower interest rate yet, as inflation is still way above long-term target of 2%. So Fed liquidity swap market, right? That's a market where foreign central banks can borrow US dollar from the Fed and commit to pay back with interest at future date. So before Powell's talk, the dollar swap market actually priced the fall that Fed would lower interest rate by 100 basis points for 2024. And after the talk, right, the swap market indicated that Fed will lower interest rate by 50 basis points for 2024 only. So that has definitely changed the market expectations on liquidity situation. Right, so dollar index and bond yields all up on back of this quickly. Right, but since we're going to have tighter liquidity than expected, why U.S. stock market also moved up that week, that day, right? Anyone can answer that question. That's where the correlation break, right? If the liquidity outlook will be tightening, right, the stock market should fall, right? But it still went up because we have some really pro, right, who understand how to manage market expectation working in the system. We had a number of very important economic data releases on Friday as well. And those numbers came out as non-farm payroll posted 109,000 jobs added for November versus 180,000 consensus and 150,000 for the previous month. And Michigan Consumer Sentiment Index posted 69.4 for November versus 62 as consensus and 61.3 for the previous month. And Michigan one-year inflation expectation posted 3.1% for November versus 4.5% for consensus and 4.5% for the previous month. So all things look good, right? Job market is doing better than expected. Consumer confidence is stronger, and inflation expectation has come down significantly. So economy is doing well, and it provides good support for U.S. market to go up at the same time, even though the liquidity will not be, that good as expected. But is U.S. economy really doing that well? There are two types of economic data. The first type is that you can manipulate easily, right? I call it soft data, like data collected through surveys, like consumer confidence index, like inflation expectations, right? It's very much it can be vary a lot, depends on the samples you take. And the second type is that it's not easy to manipulate, but you still can. It just requires more skills, right? I call that hard data, like manufacturing data, things that go through the tax system. And then you may ask, if all this data could be fake, then why we still want to look at them, right? Why market still moves around them? The answer is similar to why we watch magic shows. We know that it's fake, it's just a magician's trick, but we're still entertained, right? And more importantly, we know that other people are entertained as well, and we play the game, by the rules, right? And people will vote their money with how the numbers change. And time for some charts. Kruger's favorite.
Oh,
yes.
I do love a chart. I do love a chart.
Good charts. All right.
My favorite kind of charts are the kinds that like chop out a huge piece of the y-axis in order to just completely misconstrue the data. That's my favorite.
Okay, I'm sending them through.
Holy cow, look at these charts. We're stacking them here. U.S. durable goods orders, U.S. factory orders, manufacturing PMI. Holy crow. New home sales, existing home sales, and retail sales.
Okay, so let's look into some hard numbers, right? Things that need to go through the tax system. So durable goods order fell 5.4% in October versus minus 3.1% as consensus and 4% for the previous month. Factory orders fell 3.6% in October versus minus 2.8% as consensus and 2.3% for the previous month. Manufacturing PMI is coming down, right? Lower than 50 for November. We talked about this before, right? Above 50 is good, below 50 is bad for PMI. Well, you can argue that service PMI is still above 50. Well, I'm just not a big fan of the service part of the economic number, right? I punch you in your face, you punch me, we both go to hospital, and that's creating GDP. But it does nothing good for the economy. It doesn't make America a greater country, right? So
that's a matter of opinion. I'm going to punch K-Meds and we're going to give it a try.
It's going to be very unprofitable.
So one of our favorite economic indicators, right? We talked many times is new home sales number. Actually, were up there, held up there pretty well, right, throughout this down cycle. But it came down, right, 5.6% for October. And existing home sales down, right? And retail sales started to slow down. So there's some variance from the hard part of the numbers, from the soft part of the numbers. So if consumers are so confident, why they haven't been spending money on housing, cars, home appliances, electronics, etc., etc.? Does Powell know this? Should Fed just start lowering interest rate now before we'll head into recessions? Possibly. Fed already made mistake by starting raising rate too late, right? So inflation got out of control for a long time. Fed better not make another mistake by start lowering interest rate too late, right? As the impact of high funding costs to the economy could be lagged and start to kick in now. So Mr. Powell should be more proactive, right, than reactive. But don't forget, Fed actually has multiple objectives. The conspiracy theory kicks in again. What do you mean? Right? So what do you mean, right? It's big picture stuff, So on the other side of the planet, right, there's an important challenger, right, who can potentially flip from its number 2 position currently to take over, America's number 1 economy in the world at some point, probably next 10 to 20 years, right? That's on top of our agenda, right, to make sure that flip is not happening, right? So let's check out where's the butterfly is flapping its wings, right? So China is leading this economic cycle by going into recessions first, right? Also on last Friday, they posted important economic numbers. CPI for November was minus 0.5%. And PPI, right? We'll talk about PPI, just the industrial CPI. It went down 3%. The economy is deflationary now, right? It's bad recession. It's really bad, right? So it's perfect timing to capitalize on this, right? To actually put pressure on their currency, right? That could send them into debt crisis. And law of conservation of wealth holds at every country level, right? If they choose to burn their dollar reserve to defend their currency, that means their stock market and real estate market have to go down badly, right? The value destruction from financial market operations could be a lot bigger than the Pacific War, right? And the leverage of Fed delaying quantitative easing now is huge. So, if we delay this too long, that will probably drag our economy into recessions, right? That will hurt American people too. Well, the system think they're doing good for the people for the long term, right? There's some cost that we just have to take on. We all have to take on today. So coming back to crypto, right? There are a few important variables down the road for the next 6 to 12 months. The first one is if Bitcoin ETF is going to happen as expected, right? That's a big part of the narrative, right? Expectation for this, good run for the past 2 months. And the second one is if and when liquidity situation is going to improve, right? It's Fed influence their decision, right? Going to move, right? 3,000 over trillions, right, of US dollar-based assets around the world. And number 3 is if we're going to head into a global recession, right, and oil price is already acting as the leading indicator for that, right? So we should watch out. And how will stock market and crypto react to this if that happens? And that's it. So let's revisit these topics sometime next year.
Okay. Well,
boy, that was just like the old days.
Lots of good charts.
Oh, global. The charts and the conspiracies and the updates. Like it was everything I hoped it would be, Charlene. Thank you so much.
Yes, that was delightful.
Yeah, absolutely spectacular. Listen, if that doesn't bring back the bull market, I do not know what will.
Yeah,
and that's a true statement. That's a true statement, K-Mets.
we just unloaded the market update bazooka, so that's
it. Exactly. That's the they say you got to shoot your shot. Well, you know what? We did it.
It has been shooted.
Shooted. Yeah, correct.
Yes. It's my bad.
No, remember
English
this is the high English version of the community call. We got shot. Correct. And shottened.
Yeah.
Well, guys, we went over by 17 minutes, so sorry for that, or you're welcome, depending on how much you enjoyed it. And and thanks for coming out. Is there anything else we need to say before we wind this baby up, K-Mets?
We've got the reserve call here in about an hour 45, and so if you're able to jump on, I'll see you over there. Otherwise,
if you're in the vicinity, do that.
Yeah, I just want to add one point, right? So
please,
we really want to thank CryptoVestor and like all the community members who participate in these FUSD discussions, right? You guys have asked lots of great questions that have
absolutely
led us to the FUSD path and also shape the solution we're working on right now.
100%. Huge props to CryptoVestor, to Meta, to Cyril, to everybody who's been like talking, sharing your opinion, asking questions. Honestly, clarifying questions sometimes are the most powerful. So everybody who just wasn't sure how it worked, wanted more details, amazing, hugely helpful. Thank you for participating. Thank you for being part of this endeavor. It's still a pretty small community, and it's a pretty high quality one. So you know what?
Right.
We benefit from that, and so do you, hopefully.
That's right. The Giga brand is going to keep
appreciate it.
Yeah, absolutely. Thank you.
Absolutely. Happy to help anytime.
Appreciate it, man. Shall we call it a ball game?
Bid everyone adieu.
Yes.
It's another.
Definitely not Spanish.
We're definitely not Spanish. That's Japanese, actually, for goodbye. So.
Well, sayonara. Sayonara, adieu, adios.
All of those things. Thanks. Yeah.
See you, gang.
Have a great week, everybody. Talk next week.
Right.
And hang out in the Discord. Bye.
Thank you.